Okay, let's get started as more people continue to join. Well, thank you everyone for taking the time to be here today to talk about regenerative agriculture. I'm Max Boucher, the head of Nature and Ocean programs at FAIRR. To get started, I'll just do two quick points of housekeeping. First, if you have any questions, please put them on the questions functionality. This is what we're going to monitor. We're going to address some of the questions as we go, and if not, we'll try to pick some in the last few minutes of the conversations. And the second point is that the recording will be available on FAIRR and Domini's websites very soon, so you can catch up on anything that you've missed. So today we're going to talk about regenerative agriculture from a finance and corporate perspective, and really try to take stock of the progress made by the industry, the learnings that we've taken over the past several years, but also the challenges that we're still facing when assessing the credibility of initiatives or engaging with companies. This is a very short conversation, so there won't be any slides today, but we'll go straight into the weeds of it. But as we do so, I also wanted to take a moment to put some resources on the chat that have helped shape our thinking on regenerative agriculture over the last few years, and that might also hopefully help others. So, according to the United Nations Convention to Combat Desertification, which is one of the three major Rio conventions beside the better-known UNFCCC and the CBD, according to this organization, 14% of global agricultural land already suffers from heavy and persistent decline in productivity, and 40% of land is degraded to some extent. The organization commissioned some scenario analyses on how this may evolve by 2050. Under a business as usual scenario, an additional 16 million square kilometers will degrade. That's equivalent to the land mass of South America. It will emit 69 gigatons of carbon, or about 17% of total annual greenhouse gas emissions. Another scenario that they came up with is a regeneration scenario where crop yields could increase by 5 to 10%. Soil water holding capacity would increase by 4%. Carbon stocks rise by 17 gigatons instead of emitting, while 11% of biodiversity loss is averted. A couple of years ago, FAIRR dug into regenerative agriculture and found that 82% of the largest global listed food companies discuss regenerative agriculture in their disclosures. And this suggests that they recognize the risks and the opportunities tied to degradation and regeneration. This, on the other hand, has been very much a farmer-led movement, and the life of a farmer is in many ways uncertain pretty much everywhere in the world in terms of climate uncertainty, the impact on their crops, and the revenues. But regenerative agriculture at the end of the day is a tool to build resiliency. Since then, we've been exploring what constitutes a credible corporate regenerative agriculture program, but also how we integrate notions of just transition to our approach to support its expansion at scale globally. So that being said, today I'm joined by Mary Beth Gallagher, who is Director of Engagement at Domini Impact Investments, to discuss both of our work on regenerative agriculture. So we're going to start with discussing a little bit why this topic matters. And Maribeth, in your experience of engaging with companies across the value chain, do you think it is the case that companies recognize the risks and opportunities tied to land degradation and regeneration? And how do you, in your day-to-day, encourage them to address these topics?
Sure. Hi, everyone. So good to be here with you again. I'm Mary Beth, Director of Engagement at Domini. Thanks, Max, for that framing. I'll just start off by talking about why we're looking at regenerative agriculture at Domini. You laid out a lot of the landscape, but we know that maintaining healthy soils and reducing a key driver for land conversion is a systemic risk for our food systems and farmer communities. The current approach to industrial agriculture creates value in the short term with the emphasis on high yields, but presents risks to investors at both the portfolio level and the system level over the long term, which we see will limit our opportunities for investment. You've laid out the climate risks, the risk of soil degradation, supply chain vulnerability, and we know we need to shift to something over the long term that's more resilient. regenerative agriculture can be this type of solution and can function as a form of risk management. But we know that to achieve the real benefits requires something more systemic rather than a set of tools or checkbox kind of practices like no-till soil in isolation. We need something that transforms how we're doing business as usual. And our view of this just transition balances this need for short-term value extraction with the investment in long-term value creation through a meaningful and well developed and resourced regenerative agriculture transition. So feed the growing population with healthy and nutritious food, to reduce the need for deforestation and land conversion. It's great to see companies making these regenerative agriculture commitments. So your question of do they get it? I think companies see the risks. We know that severe weather events are taking place. Shifting weather patterns are affecting what crops can grow where. There's soil degradation, which limits the number of long-term farming seasons that we'll have. And many companies have beautiful rhetoric that they see nature as their greatest asset, which of course we welcome. But I don't know that they see exactly how this risk shows up in their own supply chains, in their own supply sheds. And we're not sure that they're necessarily working for the alignment of interests of all the actors across the value chain that need to see those shared benefits. So really starting with farm workers to farmers to landowners, the intermediators, regulators, and buyers. And Max, I think we've talked about this. It has so much potential to be transformative, but there's also a risk that regen ag is becoming like a headline or a talking point. So we're really looking to see our companies thinking fundamentally about producing food differently in harmony with nature. And as investors, what we're looking at Domini is how we define the intended goals and what are the ways that we can measure and track outcomes to see if a company's adoption of regen ag is effectively managing risks that we know are in the food system. I'll just lift up a few red flags that we see in company commitments, where you'll ask a company, how are they managing their nature dependencies and managing shifting weather patterns? And they'll respond that they have supply chain flexibility, they have supply partners around the world, and they can just allocate sourcing to a different location if needed, which provides some level of comfort, I guess, in the short term. But over the long term, that really isn't investing in the regeneration and solutions, and risks leaving farmers and farm workers behind. So some of the engagement questions I try to lift up to get to how fundamental a company is looking at regen ag in the context of its business model is asking them, in the context of your climate and nature transition planning, how do you incorporate and balance these somewhat competing pressures between the focus of regenerative agriculture on maximizing resilience over the long term with the current focus of conventional agriculture on maximizing efficiency and yields in the short term? And really, if a company can explain that, this balance, this short-term pressure and long-term investment, and speak about that with credibility around its strategy, that gives us a sense that a company gets it in a more meaningful way, rather than kind of more of a box ticking, thinking about the system change needed.
Yeah, and that's super interesting. You've touched on a few points here around resiliency and the discourse that companies have on that and what's happening in practice and things like supply chain flexibility. And it's something that I think we have seen when we have discussions with stakeholders, whether they are corporate or others in the value chain, where I think resilience to climate change has really picked up anecdotally anyway in those conversations, and companies really bring that into the conversation. On the other hand, when you look at what's happening in practice, I'm not sure that it's actually penetrated through those organizational structures in a way that really makes a difference yet. And the example I keep going back to is the beef industry in the US, where most cattle is grown or reared in the Southwest, which really has suffered some terrible droughts over the past 10 years or so. And the herds have just been down in terms of numbers because the land just cannot carry the same number of cows. And when you look at what the companies are doing about it, you look at quick service restaurants or retailers even, and the reaction has been to sue their suppliers for price fixings. Because the prices have gone up 60% since 2021. That is a hard thing to push on your consumers. And when you look at those actual providers, I just had a look at Tyson Foods before joining this call, and they've lost over $1 billion on their beef unit over the last 2 years now. So I'm not sure price fixing and suing people really is the solution here. And the resilience, the investment in resilience, I don't see really happening at this stage anyway on this particular industry. So that's kind of interesting. And also, I think the supply chain flexibility that you brought, there's more and more imports coming into the US from Latin America as well. So that's something that we see happening in practice more than the investment in resilience. So yeah, it's definitely a work in progress. But if we start to think about the place of regenerative agriculture in sort of corporate climate and nature goals, nature maybe is a little bit more early days and hard to set targets and strategies in place. But on climate, we know that emissions, life cycle assessments, target setting are so advanced now. But when it comes to Scope 3 emissions, we'll only see a couple companies discussing the relative potential of regen ag to meet their targets. One of those, positive example we've identified in the past is a Latin American company, actually Grupo Bimbo, where they say that they think about 28% of those Scope 3 emissions can be addressed by regenerative agriculture by 2050. And that's a level of kind of honesty about it that I have not seen often. I was wondering about your experience of navigating this, Maribeth.
Yeah, I think that question of like where this tool or strategy fits in the context of your climate and nature transition is really key. We started engaging on this topic with food and beverage companies, and since have seen Regen Ag come up even in engagement led by the Finance for Biodiversity Foundation with apparel sector companies where regenerative organic cotton is part of the work. Thinking about Nature Action 100, where we're talking about how companies are managing their nature-related risks. And really what we want to know is, within the role of your transition planning for climate and nature, where does regenerative ag show up, and how meaningful of a part of your commitment is this? And I'm not sure that companies have quantified it often as well as Grupo Bimbo in the example you just shared. And as I mentioned, companies will say, recognizing like none of these practices are perfect, and they just kind of give glimmers of good practice. But Carrefour is a company where we've seen they have a robust climate strategy, and they identify that Regen Ag, similar to the way Grupo Bimbo does, will contribute to 7% of its decarbonization of their Scope 3 emissions reductions. And then they outline the actions that they'll implement through raw material sourcing, partnerships with farmers, and then as a retailer, promoting sales of organic products. So really contextualizing the goal. General Mills is a company that's made a pretty public commitment around 1 million acres of farmland grown with regenerative practices. They have programs that talk about soil health and biodiversity and water. And they talk about this as one of their key strategies, Regen Ag, to addressing their climate targets. But what's missing in some of these is the specific evidence of where this work shows up within a company's specific value chain and which crops and what progress is being achieved. So I guess a red flag I'd mention is when Regen Ag is identified as a key pathway for the climate strategy without any of that quantification of the relative importance. And then the work that's being done may not always include really critical components of agriculture's climate impacts, such as synthetic fertilizers and chemical inputs. So if a company has a Regen Ag commitment, but isn't talking about reduction of chemical inputs and pesticide use reduction, that could be kind of a gap for us in understanding how meaningful this is within their climate strategy. So the engagement question we ask is, how do you link your regenerative ag commitment with your climate strategy? And is there a clear connection to Scope 3 emissions reduction potential? And then what's the relative magnitude of the contribution of this lever? Just to help us understand if this is the solution, how meaningful part of it is it?
That's such an important engagement question, because it is so easy when you read disclosure or even talk to people to think that regenerative agriculture is kind of an end in itself and not a means to an end. And at the end of the day, it is a tool in a toolbox to meet climate goals, nature goals, and others. And acknowledging that, as you've just said in some examples, and being able to discuss this in kind of transparent terms is such an important part of the credibility. We're establishing the initiative as a credible one, I think. Which really nicely takes us into the next section of this conversation, where we wanted to talk about credibility in corporate initiatives. And the hard thing is, once a company makes a public commitment or a headline pledge on regenerative agriculture, what are the responsibilities that follow, and what work now begins within the company, especially around things like capital expenditures, transition planning, and so on?
Yeah, I think it really starts with what is the purpose of Regen Ag within your approach, and what are the outcomes you're trying to achieve. And then the scope of what practices are needed. Like I mentioned, that kind of acreage goal, it's helpful to know what number of practices should be in place to kind of qualify to fit within that definition. And then transparency of which practices are used for which commodities. So really outlining where are the risks in our supply chain? Where is regenerative agriculture part of the solution? Recognizing, of course, this work is very crop and location specific. So there's not going to be a one size fits all, but really thinking about the goals and the scope is key. Something else that's fundamental to us is thinking about equity. So what support is being put in place? Farmers are facing a lot of uncertainty right now, particularly in the US. The farm worker community is also very vulnerable, often low-wage immigrant workers. So they're maybe less likely to advocate for improvements to workplace conditions, or even to encourage adoption of regenerative agriculture practices that shift from the status quo. So how are you making it easy and accessible, and really incentivizing that transition within farms? So thinking about that outreach to farmers. And then we know most farms are monocultures, and this is going to require a lot of upfront costs to make the transition. There are some estimates that the funding gap to shift from conventional to regenerative is between 250 and 430 billion dollars a year annually over the next 10 years. So if a company is making this headline commitment, we want to know that they're bringing in adequate resourcing and planning and CapEx. So some of this depends on whether it's a food producer that's changing their own practices, a consumer and packaged goods company that's thinking about engaging with different supply partners, or a retailer that needs to enable this transition through the value chain. A red flag for us would be like a company makes a commitment, and then the way it shows up is that they, like, quote, encourage their suppliers to adopt regenerative agriculture practices. And then they list up things like soil disturbance and plant diversity, but it's not clear what's mandatory. It's not clear what practices are required, and it's not clear how it will be financed or incentivized. So encouragement without really the tools and practices and resources to make it happen are problematic. Or if a company doesn't have that farmer-led approach that's centering equity and just transition principles. I'll lift up a good practice, though, in terms of a company that's made a commitment and then explained what it means, which is Danone. They have a regenerative agriculture scorecard. It covers their goals, the criteria they use, the description of certain practices, and then they categorize farmer adherence across 3 levels, kind of baseline, good, and advanced. And then they give you a sense of where within their supply partners the farmers are in terms of adopting those more advanced techniques. So I guess it's to say the commitment and then the context is really important. So some of the engagement questions we could get to on, like, how is this work being unfolded? Like, what kind of agricultural practices are you using? If you're prioritizing certain crops or locations, why did you prioritize those? What proportion of their supply chain are going to be covered by this commitment? And then providing some of those insights that give you a sense of the credibility.
And at the core, everyone seems to agree that regenerative agriculture is all about outcomes. The means justifies the end, so long as a farm improves its soil health, it reduces emissions, and embraces and fosters biodiversity, has resilient water cycles. At the same time, you've kind of touched on it a little bit, but disclosure really often seems to stand alone a little bit or talk about deployment in acres under regenerative agriculture. Why do you think that is, and how helpful is this type of reporting for investors compared to more outcomes-based disclosure?
Yeah, I think it's hard as investors. We're like very far away from the farm. We don't know exactly kind of what the practices being used are, how it's going to have impact. But we want the emphasis to be on doing the work rather than like data collection. And we want it to be accountable and transparent to know that it's effectively reducing the risk we talked about around climate risk and resilience. So I think we're still kind of working to figure out as a community that right balance of disclosure that isn't burdensome to a farmer, that leverages the potential of the various players in this space and also technology that's being developed, but provides an investor insight that there's a result from this program, less exposure to biodiversity risk, less exposure to climate risk, improved livelihoods for farmers. I'll give an example, and it's not to like speak negatively, but a company that has made a commitment recently and done their disclosure is ADM. And I think what's helpful is that they talk about enrolling 5 million acres in regenerative ag. And then their disclosure is a report that talks about the carbon sequestered, the GHG emissions reduced, the number of farmers engaged, the type of crops grown. But what's not really there when you look through that disclosure is the understanding of the impact and outcomes. So when the reporting is case study based and narrative, it's difficult to understand how it's actually helping to manage the risks. And is regenerative ag serving as the solution that we're trying to lift it up to be? So in engagement, what we ask a company about is what are the climate and biodiversity outcomes you're seeking to achieve through regenerative ag? What are the outcomes you are seeking to achieve for farmers? And could you do a baseline assessment prior to beginning this work? And what tools are you going to use to measure progress and outcomes? Thinking about like the dimensions of impact they're looking to further through this work.
Yeah, and as you said, ADM is definitely one of the leaders in terms of disclosure and involvement in these programs. And even they are able to talk about CO2 sequestration, reductions, and emissions, but they don't really go beyond that, which probably suggests how difficult it is to find those measures for other outcomes. And deployment is one thing, but what we found across our engagement and our discussions for a couple of years now is that trying to estimate the sort of shade of green or how potent is a regenerative program or project in practice is actually really, really difficult. And, for example, we've seen quite a lot of initiatives that say, hey, if you do cover crops with low tillage, so you just cover the ground in winter while you're not growing anything, and then instead of just tilling the ground, you put some glyphosates or other pesticides to get rid of that cover crop in the future. And to say that's regenerative. And I think intuitively, most people would say, well, that massive use of pesticide is probably not regenerative, but we don't really have a good framework to balance these things and try to figure out, how green is this initiative in the grand scheme of things? What would happen if we did things slightly differently? So we spent quite a lot of time in the last few years actually trying to map these practices against planetary boundaries so that at least we have some frame of reference to understand some of the downsides and potential side effects of doing these things, which is still a work in progress, but at least it's a start. And we don't see that very much from corporates yet. I think it's quite early days or even for investors. But back to you, Maribeth, I was curious to hear about your experience on Nature Action 100. It's been focused on the practices and outcomes that companies deliver. What are some of the key learnings from this that we can take away?
Yeah, I think this question of like what constitutes regenerative agriculture and the definitions, I think is kind of tricky for all of us because we know it's a set of different tools and practices, but how do they need to be used in combination to achieve outcomes? I think there's increasing investor awareness in the potential of regen ag, but also I think we're all kind of trying to figure out like what is meaningful disclosure and how do we overcome what seems to be a challenge, like you've just explained it, around the right balance of information, the right burden on a farmer to collect outputs and outcomes information. And I think we need to work together as a community to help guide companies in the type of the disclosure that investors are looking for. That's kind of that like right size. But I think it's been like a headline topic among a lot of the Nature Action 100 engagements with food producers, with retailers. I mentioned also with apparel companies. And we're seeing like increased adoption and good progress, but not necessarily able yet to connect the dots into how it's delivering value for the company.
Yeah, the value for the company is an interesting one, right? Because if we talk about regenerative agriculture, often I've heard again in many conversations a strong disagreement on whether it's addressing a problem in efficiency and resilience, therefore it will pay for itself in the long run, or does it require financial incentives? Is this a short-term transition problem that we need to support, or a long-term income problem? And ADM we're just talking about earlier, they are paying up to $40 an acre for farmers to do this. And to me, it implies very strongly that A, it's probably needed if you want to get the kind of traction that is necessary, and B, there is a return on investment on this. I don't think ADM gives $40 an acre out of kindness to farmers. So this puts a kind of interesting place in the debate, and I was wondering if you have thoughts on where companies stand on supporting farmers, and potentially what does that meaningful support look like?
Yeah, so some of the stats I've seen are that there will be payoff, but it'll take 3 to 5 years. And then there could be an increase in profits by 70 to 120% for regeneratively grown products. Other studies show that the benefits accrue after 9 years. So how do we get farmers over that period of time where they're potentially having lower yields, not realizing the income boost from regenerative? And they really need to invest in new tools and infrastructure and have offtake agreements to make sure that they have a market for the products that they have. Some reports talk about the benefits to farmers, like lower input costs. Fertilizer can account for 15 to 25% of production expenses for farmers. So reducing that helps, it builds resilience. But we've been looking at this also in the context of our banking and insurance holdings to see how they're financing regen ag. And the business model transition, and kind of some of the things that looks like are terms of financing linked to improved outcomes. So some of the retail banks have preferable loan terms with payment upfront for transition costs. Bank of Ireland is one example that provides discounted flexible financing. There are green frameworks and lending and finance targets that some of the large banks have for adoption of certain practices. An insurance company, Munich Re, is providing certain technical support with data-driven tools to monitor soil health. So seeing not only the work within the food and beverage companies to invest in their own supply chain, but the work of insurers and financiers to invest in the transition alongside farmers and make it easier for them over the long term.
And I know we're coming to time, but the last thing we were going to talk about is how we support a transition of farmers while keeping this a farmer-led movement, which can be quite difficult. And I thought that Carrefour, an example that you gave earlier, actually has a really interesting approach to this, where the relationship with those farmers is at the core of the plans. And they put this in 3 simple points. It's long-term commitment, price commitment, volume commitment. And it's quite simple, but it does kind of give a really good framework for the relationship they want to build with those frameworks. And as we conclude, I just wanted to hear a little bit your thoughts on this and maybe a couple key takeaways to take out of this conversation.
Yeah, that needs to link up the farmer decisions and incentives with what the market demands, and regenerative ag is really what we're looking for. So farmer-led approaches, who's at the table? Are there new models and contracts for the long-term investments and protections for fundamental farmer well-being? So that just transition dimension is something we really look at across companies. Carrefour, again, is an example that we lift up there. But as we think about closing, I just want to underscore, I think there's a lot of potential with regenerative ag to address some of the issues we're concerned about. But it needs to be done in the context of a company's overall business model and the way the food system operates. Acknowledging it requires investments. We need to understand how companies are not only making headline commitments, but moving money to advance those and put farmers at the heart of this work with safe and equitable workplaces, and leading the transition. And then finally, as we work to get it right on measurement, how do we find that sweet spot of measurement that's enough to demonstrate effectiveness and credibility without being either too high level and case study oriented or too burdensome that it ends up distracting from the work that needs to be done. So to be successful, I think we need to find the ways that we show this systems change is taking place and being supported and financed. But I think the work that FAIRR is doing has really helped us to look more closely at this issue, and we look forward to continuing some of these important conversations alongside corporates as they work to figure this out.
Yeah, thank you. And I think if I summarize a little bit what we're trying to do with this work, really a couple of key takeaways for us is keeping the focus on real world outcomes, making sure that what is set out to being achieved is actually deployed and that it achieves those things. And also that as investors, we're used to thinking about corporations as businesses, maybe not farmers so much. But at the end of the day, resilience and adaptation needs to be profitable for them. They run a business, and they need to see the benefit to do these things. Otherwise, those climate and nature goals that depend on those supply chains are probably not going to happen. So I think those two key points have transpired from the conversation, and I really see those as potentially some of the biggest impacts that investors can have on this and on building that resilience.
Thanks so much, Max. I really enjoyed our conversation today. Hope the audience found it useful, and I think we'll continue to work at it together.
Thank you, Maribeth, and thank you everyone for taking the time to attend. Have a good day.